Hello everybody, how are we doing? All okay, all good? So I'm a bit late this morning, this afternoon even. But I'm here now. Right, non-farm payroll day. Make some money. Well, hopefully. No movement today as expected. Like I said this morning, non-farm tends to be an accumulation in the London session because they don't want to move the market anywhere. They're just building positions ready to move it on non-farm. So we're waiting for 25 minutes and then it'll all go boom and everything will start moving. So hi Trevor. So yeah, good moves ahead of it obviously yesterday, but flat as a pancake today. So nothing's gone anywhere on the index. Nothing's gone anywhere really on anything. All pretty lethargic today. So a few bits have moved a little bit. We've had a bit of yen strength come through. Whoops, did I just open a new chart? I did. Afternoon, Adrian. So yeah, there's been a bit of yen strength. That's all we've had. So the yen's pushed down a little bit. Everything else though, euro's still pushed ever so slightly up this morning on some of the pairs, and you can see it's sideways against the yen as well. So shows you how strong the euro is at the moment. The underlying strength in the euro is actually pretty good. It slammed the New Zealand down because New Zealand's had a fairly weak morning as well, not particularly though. So yeah, so bit of movement, but nothing to write home about. Still all within the ranges of yesterday basically, and a little bit sideways. So so from a ADR perspective, we have had a few hits gone off, so we'll whiz through those. Obviously 4 hours and the hourlies are all still concentrated on the euros. So the ADRs we've had are the yen basically pairs. So Swiss yen. If we had a weak Swissy as well. Aussie's down against the Swiss. What's the euro? No, so this is just yen strength basically. So Swissy yen, big push down off of ADR. We're coming off of that now. So we had a reversal alert just happened on that. I wouldn't really go taking any ADRs this close to non-farm. I'd wait till afterwards. Euro odd. That's hit 125. So that one has still pushed well. Basically, we had a really good session in Asia. Did 3/4 of the ADR basically during Asia. And obviously we've just pushed up there. Lovely big shooting stars at the top. Really tight reversal with a retest. So really nice looking there. So that's it. EuroCAD again hit lovely M. Just had the reversal on that one. Euro Swiss and Euro Pound. Again, all textbook M pattern reversals. 125 ADR, etc. So all pretty good, the ADRs, but up to you whether you want to take any ADRs ahead of non-farm. I mean, everything on the euro is obviously massively extended at the moment. And the fact that we've had some hit ADR to the upside as well today means they've just gone even further. So highly likely the elevator shaft is going to get deeper for that lot, isn't it? So they're all pretty good opportunities for shorts. They've all kicked in. So if you took any of these in London, excellent. I'm just going to quickly have a look at the VPS and just see where my positions are on the EA. Oh, excuse me. So this is H4 M15 in line with COT. So you're in New Zealand. Just want to see if I need to put any manuals on these. I haven't put these in order, have I? There we go. Where are we? That's 82 pips. We're 71 between trades, and we're up to a 124. I'm going to take a manual one there. Yeah. So just take one more position there on that one. Because by the time it hits the reversal alert, be a bit late. That one's just taken one, that's fine. That's just taken one. Euro CAD, Euro odd. Euro odd. Yeah, I'm going to take one on that. Whew, that was close. Take a slightly larger one on that one. And Euro CAD. Where is Euro CAD? It's 45 on a 59, leaving that one. That's fine. Okay, so those have added on. So I'm just basically, just to explain what I'm doing, I'm taking manuals on these. So I want the trades to be spaced out around about 60, in this case, around about 60 ADR, 60 pips or more when we get a reversal alert. So it's getting in on signs of weakness. If we've had a really, really big, strong push, you tend to find, obviously, sometimes you don't get a reversal alert because the strength is just so strong and it takes you a long way away. And if the reversal alert is miles away from price, I'll tend to add a manual entry just to make sure that they're fairly nicely spaced out. And obviously, I also don't want them to get too close together. So if you get a reversal alert, which is kind of 30 odd pips away when it's going to trigger, and you're 90 pips high or something, I kind of want to add one in. I want to get in again. So I'm just doing those manually just to make sure they're spaced nicely so that when price does start to come down, we can get out of the positions easily and quickly. Those are all fine. Nothing banked again today. Those are all fine. Euro odd, actually. What's that? 134 pips on a 74. Yeah, I'll get one of those as well. Yeah. And this one, they're all spaced nicely. That's all fine. Euro pound. Yeah, I'm going to add one on Euro pound. It's 53 pips. We're currently 34. Yeah, I'm going to take another one there as well. It's a bit close, but I have faith. Right, that's that done. What's happened today with my strategy quants? 135 in the bank, 130 in profit at the moment. We're long in the euro US dollar and the pound US dollar, so that could well go bad today. I'm kind of hedged. 500 in profit there at the moment, so I've still got to get that back. So yeah, they're not doing too bad. Right. Sorry about that. Just need to quickly do those while before ahead of non-farm. So yeah, ADRs we've covered. H4s, it's all pretty much the same as we looked at this morning. The pound yen extension. We looked at this one this morning, didn't we? We had this quadruple top which started to play out. That's coming down very nicely. So if you got on that one, well done. That's if it hasn't paid out already, it's about to. 57 pips. Got half an ADR off of it at the moment. So that's doing very well. Pound CAD. That's still sitting there at the moment. Massive wicks to the upside on this one. So due down would move. But I don't like the look of this wicks to the downside. Look at this, bodies. Look at that. Buyers. Tons of buyers. Still a load of buying pressure coming through on this one. So real indecision, real accumulation going on that one. We've got CAD news obviously coming in very, very shortly. It's the CAD unemployment figures, which get released alongside non-farm payroll. So you're going to get some movement off the CAD at the same time as you're getting the movement off of everything else to do with non-farm. So that one could have a decent push on the Canadian dollar, which will obviously bring that one down this afternoon. But it's nicely extended, poised for a drop. We haven't had a profit take yet on that entire move. So, yeah, it's due a pullback. Apart from that, obviously, it's euros. We know all about the euros. Euros are all shot. Beautiful shooting star going in on the Swissy and the CAD. Pound's doing all right. Euro yen, we've had a doji. We're putting in a bearish engulfing. Euro New Zealand starting to weaken. Euro US dollar is looking like it's about to collapse. And we've had no US dollar strength. So that Euro US dollar is coming down on its own warrant. That's the euro weakening automatically. So yeah, all looking good for a non-farm explosion to the upside. But hey, we'll see. We never know. If it goes the other way, it's going to be a squeeze. So odds. Hourlies, exactly the same thing. We've got the 85s lit up on the euros. Euro odd. 1 hour. We've had a push up today. We're embedded above the 85. We were embedded above the 85 level. We're embedded above 80 still at the moment. So yeah, this thing's been embedded since we started the move yesterday, and there's been zero profit take on these. It's so tempting, it really is. It's a big gamble to take, but if you shorted every euro this afternoon, you could make an absolute killing. It's a massive gamble, but the trouble is, I mean, the play on it this afternoon, I think, obviously now this last hour we've started to see this weakness jump in, is a stop somewhere around kind of, I don't know, give it a bit of breathing room in case they come and just take that liquidity and go with it. If you put a stop play on every euro short with maybe 0.5% risk up there, worst case scenario, you lose about 2.5% of your account. Best case scenario, you'd probably grow your account by 20 to 25% if this plays out this afternoon. There's so much opportunity on it, but depends how much of a gambler you are. And it is a gamble. It's not a trade, is it? It's a gamble. So, but yeah, really nice opportunity on all of these euros for a profit take this afternoon. But it depends whether they're going to stop hunt it first or whether they just go, you know, and it could be a case of the euro just goes and screams off to the upside this afternoon. Who knows? But it's non-farm payroll. Anything can happen. We shall watch with bated breath. I don't even know what to watch this afternoon. It's difficult to know what to look at, isn't it? So much opportunity out there. So yeah, scalping this morning. I've been just scalping away, made a little bit more, not a lot. I've been playing around with this new EA that I've created, which is basically just a trade, a scalping system that I'm building for price action. Basically just to kind of semi-automate my decision-making process and stop me over-trading, because I tend to over-trade when I scalp. So I'm just working on that at the moment, but I'm working on that all morning. We'll have a look at that in a bit. Anybody got any other pairs they want to look at? Because there's nothing much happens this morning that is not what we were looking at today. Anything that was extended this morning on the euro basis is either where it was or a little bit more extended, and everything else is exactly where it was. So I haven't really got anything else to cover. So it's just a case of we're on the countdown at the moment to non-farm payroll. So if you've got anything else you want to look at, any other pairs, let me know, and we can have a look at them. But this little EA that I'm working on, basically, it's let's look at the strategy tester actually. Pound US dollar, just pick one. I'm not sure what template I've got loaded for this. Looks like I've got an RSI on there. But basically, all it does, don't really need the RSI. We've got, it's a bit like that trade manager that I've been using. So you've got buy sell buttons, close, modified TBs and stop loss. Close MP is a close the most profitable trade. So when you're adding into positions, when you're scalping and you start seeing the price go against you, you can close out the most profitable trades just to bank some profit. You can move everything to break even straight away. So if you want to walk away from your desk and the phone rings or something happens, you can just hit that button and walk away, and you know you're not going to lose any money when you've got positions in profit. And you can alter the TP, stop loss, etc. Blah 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 blah. It also draws in automatically the Frankfurt Open and the New York Open, so you can trade the DAX and S&P or Nasdaq or Dow. So it tells you when those openings are coming, and then it also automatically draws in the opening range for you for each session. So you can see what goes on in the first 15 minutes. You can adjust this as well if you wanted to use the 30-minute, the hourly or whatever. So you can see obviously there's an opening range breakout retest. So you can see the opening range and decide obviously which way we're going. So if we're going to go into a trend day, when we break the 15-minute opening range, you'll just be looking for shorts. If we break to the upside, you'll be looking for longs. If we're going to go into a rotational day, we'll tend to do something like that. So you can then play the opening range highs and lows and scalp in between them. And if you want to as well, it will automatically take trades for you on those opening ranges. So you can say trade for me at the Frankfurt and the New York Open, and I want you to trade with a stop loss of, I don't know, 100. This isn't going to work because I'm in S&P. And you can have scalp and runner trades, and it will basically just trade for you. Those settings aren't right, so I don't know what that's going to do. Have I got TP set? I don't think I've got TP set on them. So yeah, so it'll auto trade for you as well. So that's basically all it's doing at the moment. I'm going to add more functionality into here as well. So it's going to put in the propulsion candles. So it'll alert on propulsion candles. And I'm going to put in their candlestick patterns as well. So it will alert on bullish engulfings after hammers. So that sort of thing. It will alert on 3-bar reversal patterns, like that one there. And various other candlestick patterns, basically. So, you know, whenever you see a hammer followed by a bullish candle, it will alert. So just a kind of, because when you're scalping, you're sitting here monotonously watching, and it's so easy to zone out. I find when you scalp, I'll be sitting here going, yeah, and then I'll start looking at something else, and before I know it, I've missed that whacking great bearish engulfing, and I'm 2 minutes past it, and I'm like, missed it. So just it will pop up and go, oi, look at this, and things like tweezer bottoms, tweezer tops, triple bottoms. I'm going to build in support and resistance bounces as well, so it will catch those sorts of plays there. So yeah, I'm just building it out at the moment. But it's a manual scalping tool, basically. So the whole idea of it is it's so you can quickly go bang, 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 and just scalp in, out, and muck about. It will show you your break even as well. It puts a break even line in for you automatically when you take multiple positions. So you can see that orange line there. It's drawn that. There's only one position, obviously. So, but yeah, so that's what I'm working on. Yeah, I'll let you know when that's a little bit further down the line. But again, this is the same thing I always do. All the tools out there are not quite what I want, so I basically tend to remake them and make them exactly as I want them. So, okay, non-farm payrolls coming. I'm tempted to try and scalp it, but I'm not sure whether I want to or not. So, what should we watch? Obviously, Euro US dollar. Let's watch that. Let's have a look at what's going on with S&P or NASDAQ. Let's watch the S&P as well. Just keep an eye on that one. Just in case I feel like I fancy a scalp. I'm going to pop my dash on there. 200's probably all right. Right, so we're just waiting. Looks amazing for scalping. I hate overly complicated trade panels. Yeah, this is what I'm trying to. That's all you need when you're scalping. I want to be in. I want to be out. I want to have auto trading turned on so it actually works. I want to be in. In? Why are you not going in? Oh, I haven't got it turned on. Okay. Yeah. So, and then it will also. I've got a load of data coming up, but how long have we got? 3 minutes to the open. So it also will tell you your profit, your balance, what all your settings are set at, and your percentage. So I'm going to get rid of all this lot. I don't want all this. All I'm interested in is this percent profit, because I'm interested in. As you know, I work on percent profit. I'm not interested in how much money I'm making. That's irrelevant. If I'm making a percentage profit gain every day, I'm increasing my account balance. And if I'm increasing my account balance, my risk is going up accordingly. So what lot size it takes, I don't care. How much profit it's making, I don't care. I'm interested in percentage. So if every scalp I can make 2% and I can make 5 scalps a day, I've made 10% a day. That's all I'm interested in. So I'm going to scrap all of this lot. I might make it optional. And literally just down in the bottom corner, I'm just going to put a percentage profit gain. And that is what I'll keep an eye on. And when that gets to a figure I'm happy with, hit the close button. Out. So right. 2 minutes. Let's watch this on M5. See how big we can get the candles. So what does everybody think? Big? Small? There's that thing again, look. That 100% is still there. What is that? It's driving me nuts this morning, and I can't find out what it is. It doesn't appear in the object list. It's not there. That thing, that does not exist. Honestly, it doesn't exist. I don't know. Anyway. So what do we think? Up, down, up, down? What's it going to be? Hold on to your butts, Diamond says. Yeah. Here we go. God, the amount of times I've sat here and said this and then it just doesn't do anything. It's utter letdown. Placed a stop order on Euro US dollar. What, short? Yeah. Short, long. Could be anything. We'll see. Spreads are starting to widen. 1 minute. One little countdown clock, don't we? I think I've got one actually on that one. How long we got? 20 seconds. This is where you see my MT4 platform freeze up. Oh, we've gone already. Oh, it's open. There we go. ADRs flying off all over the place. See how much slippage we get if I scalp this short. Okay, strong US dollar. CAD unemployment is worse than expected. Unemployment rate higher than expected, so bad news for the CAD. Ugh. Let down. Okay, so we just done a liquidity run on the lows. See what they want to do with this. I'm just going to see if we can double bottom on the S&P. Might have a quick scalp long. Sorry, it's got loads of email alerts coming in. Shut that off. It doesn't seem to be doing an awful lot. Which pair is this? Which pair is what? Zolani. This is Euro US dollar. That's the S&P 500. Okay, S&P's coming down to double bottom. If we're going to get a strong US dollar, I would expect weakness in the S&P. I'm just waiting to see what the euro does because it seems a little bit undecided to me at the moment. Obviously got strength in the US dollar, but it's not really going anywhere though, is it? Just taking one short on the S&P. I'm going to see if we get a pop at the lows. If it gets through this level, it could well just pop down, and if it pops down, we'll get a load of volume coming in on it. That took ages to get filled, that order. Thinking about it down at the lows. US dollar looks like it's still pushing. There we go, got a little pop there. Add in one more. God, see how long that took to get filled then. This is an ECN broker. This should be virtually instant. There's a hell of a lot of orders going in at the moment. Can't see the profit out there. 17. Euro's coming down. So good strength on the US dollar. Still pushing. ADR, New Zealand. ADR is going to go off all over the place. Every US dollar pair is going to be hitting ADR in a minute. That's the average line that the EA draws in. Okay, starting a retracement. So close those out and take that off there. Wait for it to retrace and see if we get a retracement and drop. It might just keep going. I'm not going to take too much of a chance on it. But let's move that down a little bit up there. Okay, so this is a retracement. It's 38. That's all we got. Try one more. Should let that come back further, I think. Closing that. See if this can get a nice deep 50% retracement. I want to see it on the S&P really as well. Just seeing if anything closed out there. Closed out a little bit on that. Closed out a bit on that. Right, so pounds on the EAs. Closed out pound US dollar. Oh, sorry. No, closed out euro US dollar. Oh, no. Hang on. Whoa. What's that? That's live. Hang on. Yeah, pound US dollar. Sorry. So closed out that short on the pound US dollar. Nothing closed there. US dollar Swiss closed out on that one. Yeah, so those sales, those two buys closed out. That's all that's closed out there. That's all nicely in profit. Be closing some more out in a minute. Aussie dollar CAD's just about to close in a second. Closed out pound US dollar. Sell. That's it. So I closed a few bits and pieces out. Okay, S&P's just retraced 50%. Let's go wait for this 1 minute candle to close. See if we get some bearish price action coming in. Big push down on the euro US dollar. So the US dollar pushing back a little bit. S&P looks like it wants to come back up. Potential, yeah, it's what she already tested, isn't it? But yeah, it looks like it may want to come back up and just retest up here. See how far it gets. Bit of a slow one today, isn't it? Non-farm. Not the strength I was expecting. It's the right direction, but not nowhere near as strong as I was hoping. I want to see it at least come back and retest 150 ADR today. Should be able to do that, at least. Okay, it's just starting to roll over a bit now. Let's get ready to get in another one. Selling one. US dollar strengthening. It's not very convincing though, is it? ETA for me. What's ETA for me mean, DJ? Selling another. Oh, better for me. It's not crazy. Yeah. No, it's I don't mind if it's not crazy, as long as it's going in the right direction. It can grind down all day now for all I care. You know, we've got the directional bias started. We're just about to get a reversal alert on the hourlies on all these euros. Well, most of them. Some of them. Actually, no, we're not. Most of the euros actually are holding up fairly well. Pound US dollar and the euro US dollar. Those are coming down. Okay, a little bit of a pullback. Still going on the we've pulled back to 38, so in theory if this is going to just be a weak pullback before a continuation, that's really all you get. Same as we've had on the euro, but adding one more short. My dog's about to go mad. Delivery man's arriving. Just to pre-warn you. She hasn't spotted him yet. You'll hear when she does. Yeah, only EU dropping. That's because we've got the US dollar strength. EU seems to be holding up. We'll have a look at the EU pairs again in a minute. Just wait and see what happens with this. I got a feeling we may return to source on this. This is not atypical of non-farm at the moment. It's just an utter dud. But we'll see. We are seeing the strength on the US dollar. It's just really slow. How long am I going to hold euro US dollar? As long as I need to. I don't get out at the end of the day. No point in getting out at the end of the day. It's not going to go anywhere. What have I got? Euro US dollar. H1M15. Yeah, I mean, yeah, probably. I might get out of them today. Might not. We got New York Open, obviously. So when New York opens in a 3/4 of an hour, we'll get a bit more of a kick. But if we can grind as far as we can towards the New York Open, that'd be fantastic. That's going to be a loss. Just retesting this wick here. No, it's going to go the wrong way. Just holding above the 61.8. If you're day trading, Gary, obviously, yeah, I mean, get out by end of the day, obviously, but then you have to take a loss if you're not in profit. So I don't see the point in taking a loss just because it's the end of the day. I take a loss if I think the position's going against me. I don't think the position's going against me. We're going to get a pullback. It might be next week, though. So I used to worry about holding over the weekend. I haven't worried about holding over the weekend for a long time. I haven't seen a gap. I haven't seen a weekend gap on a Forex pair that's been anything that could go anywhere near destroying 5% of my account for a good 2 to 3 years. Doesn't happen. Forex gaps at the weekend just don't have any impact whatsoever. And if you did get them at the weekend, they gap fill virtually same day, if not day after anyway. So doesn't really make any difference. Weekend holds. I don't understand why these prop firm companies won't let you weekend hold. It doesn't make any difference. Most of them do now because they've realised it doesn't make any difference. So if you're using stop losses, yeah, you're going to get stopped out because there's no liquidity. So you'll get spread and you'll get stopped out. But if you're position trading, hold the position. That's what position trading is. You're holding long term. So S&P is moving towards 61 retracement to retest last week's move. Quite possibly. It's moving towards the 61.8 retracement to retest the non-farm payroll move at the moment. Just thinking about it. We're just stalling at the minute. US dollar stalled. So we've got a nice propulsion gap formed. So we're either going to fade this afternoon and then pop, or we're going to pop and then fade it next week. It's not actually a very big gap in the grand scheme of things, so I wouldn't be surprised if this just gets faded today. But they have basically all the liquidity they've built up in New York, Asia and London. They've now decided on directional bias, so we should see a continuation move this afternoon. But who knows? The market at the moment is just all over the place. So yeah, that's my point. Always been told to not to hold over the weekend. Yeah, why? Why not hold over the weekend? Go on a daily chart. Yeah. And let's try and find a gap. Wasn't one there. You had that much movement there. No gap there. No gap there. No gap. I mean, you go back as far as you like. I'll prove the point. There is no gaps anymore in Forex. And if there is gaps in the market in Forex, it's because there's been a earthquake, a volcano, or a war. Or a president's been shot. Or, it takes a lot to move the market enough for over the weekend for the economy to lose complete faith in a currency. It just doesn't happen anymore. We've moved into a period in the last 5 years. We've moved into a period of automated trading. 90% or 80% of what you see happening in the markets is controlled by 10 banks, and those 10 banks, 90% of their movement is controlled by algorithms. Those algorithms will just adjust, and they will balance the books. If there's a gap, it will get filled. So it just doesn't. It's no. With things like indices, like the DAX and the Dow and the S&P, there's more of a case for it, because the stock market will get affected by things that happen over the weekend. We have earnings, we have all sorts of stuff happening over the weekends that can affect the stock markets. And the stock markets generally gap anyway, yeah? I mean, look at the DAX. The DAX gaps every day. Yeah, the DAX always gaps. We had a look. I played this. You saw me playing this morning. This gap fill. Yeah, we got a gap there which hasn't been filled yet. We got a gap there, filled. Got a gap there, filled. Yeah. Occasionally you get gaps that don't fill, but this is because the Nasdaq destroyed itself. That's why that didn't fill. Didn't get an opportunity. Basically, DAX is everyone was dumping stocks. So yeah, just don't worry. If you're trading Forex, just don't worry about it. Unless you've got ridiculous size positions on, then yeah. I mean, if you're 50% away from a margin call, yeah, you probably want to close some stuff out. But if you're 50% away from a margin call, there's a problem anyway, isn't there? So gap might actually help you. You never know. Sometimes you have no choice. You got to hold when you're position trading. Yeah. If you're trading futures, obviously the reason you don't hold over the week overnight with futures is because it costs you an absolute arm and a leg to hold positions overnight. There's a massive futures overnight swap fee, which you have to cover in your account. So obviously there's aftermarket trading which goes on, which will affect gaps, which will affect blowouts basically. So they make sure you've got a massive margin in your account to hold overnight, which is why the futures prop firms like Apex and Lilu and Topstep don't let you hold overnight because it's too much of a risk. But if let's say we're getting to sort of 15 minutes before the close now, and I'm in a Forex pair, I'm not just going to shut out and take a loss because I'm going to bed. Market's going to carry on moving. It's 24/7/5, isn't it? So we want to 24/7/5, 24/5, however many days in the year there is that we trade. S&P stalled. We're waiting for the open now. Might get a push back to the lows. I might. I was just going to say I might close one of these out just as it starts to look bearish. What if it breaks these lows? I think we'll be all right for a short, but otherwise, I'm just going to reduce risk on this. We'll just go down to 2 positions instead of 3. There we go. Still not looking particularly good, is it? US dollar's powering up slightly again. Don't like these wicks at all. Closing one. Just a heads up for everyone else. CMC charges 0.65 per day for 0.2 euro US dollar. Everybody has an overnight swap. All brokers have an overnight swap. Do you know what an overnight swap is? It's the interest you're paying on your loan, basically. So whenever you put £3,000, say for example, into a broker account, that broker takes out a loan for the same amount of value, because when they take the opposite sides of your trades, they need to cover themselves. So the swap fee basically is the commission on the loan that they've taken out on your behalf without telling you. If you read your contract, it's all in there, but nobody ever reads it. As soon as you open an account with a broker, you are signing a contract that says they have every right to take every penny of your money if they want to, if you read the small print. Which is why I keep no more than 20% of my entire trading fund in my broker. Because if they are going to do what they've done many times to many people in the past, they're only going to take 20% of my money. And then I won't be using them anymore. I did an interesting video on how brokers actually work. I can't remember if was in the old pro course or whether I don't think I put it on YouTube. I don't think I had the balls to put it on YouTube, to be honest, because I didn't want a load of brokers phoning me up having a moan. Others have had that happen to them. I was like, nah, I don't really want to get on the wrong side of brokers. So, but yeah. But if you're on the brokers B-book, they'll be taking the opposite sides of your trade because they know that 95% of you lose money. Therefore, why not make money out of 95%? If you stick, I think the statistics are 60% of traders lose 60% of their balance within 60 days of starting trading. Pretty good if you're a broker, isn't it? Guaranteed to get 60% of their money within 60 days. Nice business plan. But yeah, there are a lot of brokers that will charge less swaps. So yeah, shop around. Swaps. I don't know what my swaps are. I don't get swaps because I pay commission. I don't hold overnight on most of my stuff. There you go. I pay £1.59 on that US tech. $1.59 on that US tech. So yeah, I don't pay a lot. Wait, you keep only 20%. Please explain better. So basically, I trade a 30k account of my own money in Forex, but I only ever put 5%, 5k in my broker. And if I ever get to a point where I'm starting to margin call, I'll top it up. But I won't put more than 5k with any one broker. Because I want my money available to me. I trade with a lot size of a 30k account, but I will only trade with 5k of the actual capital in the broker. I used to spread my capital over 4 different brokers. So I used to trade with Pepperstone, IC Markets, Darwinex, and the other one, CMC. And I basically put 5k into each of them, and I would run different instruments on each. So I'd have the pound pairs and euro pairs running in one. I'd have the Aussies and the CADs running in the other. The yens and the USs running in another. And the Swissy, I think I stuck in with the euros. So that I had my risk spread. So if one of those brokers went bust or started to do something stupid, then I'm only going to lose a proportion of my money. I got stung by Axie. Not by Axie, by Alpari. I was in the Swiss franc cap removal, and it took me over 3 months to get my money back out of Alpari. I don't want my entire 30k trading account taken away from me because of something happening in the markets. So keep it low. Yeah, I've got 2k. You can see what I'm trading on this account. I mean, this was a 2k account on whenever I started it. 23rd of January. This was a 2k account. It's now a 5.5k account. But I'm not trading lot size in here as if this is a 2k account. I'm trading lot size in here as if this is a 15k account, 20k account. Because I'm not going to be, I don't want to put all my money in here. Why do it? If I get to a point where I get on a margin call, I can always top it up, can't I? But I'm trading with stops in here anyway, so it doesn't matter. This is my scalping account. So I'm never going to lose a massive portion of it. Adding one more S&P. Just going to go for these lows, see if we can get the lows. It's grinding back up. Do you know what? I just don't like it when it grinds so slowly, but okay, lows are coming. The lows are coming. Just gonna close one out. Bring the stops down. See if we can get a pop out the lows. We're either going to double bottom or we're not. Just going to move to break even on it. That's another button I'm going to create as well. I've got break even, and basically what that does is it puts the stops to the break even of each position. I'm going to make another button which is average break even, which will move it to the actual break even line. Same here, 5k per account. I run mean reversion on different accounts, 1 to 500. Yeah, spread your money out. Pick big reputable brokers and spread your money out. They're all going to charge you one way or the other. The broker's job is to make you trade. Every time you take a trade, they either take a spread or a commission or both. And every night they will take a swap from you. And 90% of people, they will be taking the opposite sides of their trades and taking all of their money when they lose. So you will get moved from what's called an A book to a B book, or rather a B book to an A book. At some point when you become profitable, the broker will turn around and go, damn, we've lost a lot of money on this guy. We're going to move him over to a different book. And then all of a sudden they'll turn around to you and go, hey, would you like a pro account? Well, what we do is we'll give you smaller commissions and we'll tighten your spreads because we know we can't make money out of you because you're going to be a proper trader. That's when you know you've made it. When the broker gets in touch with you and says, would you like this? Would you like to go pro? Doesn't always happen that way, but there's two different books they run. One book, they run opposite sides of your trades. The other book, they don't. They identify who the profitable traders are and who the non-profitable traders are, and they make money out of them accordingly. Still pushing down. I don't like the way that this is going back up, so I'm just going to close one, move that to break even, and let that one run. We're getting some weakness coming through on the US dollar, so the S&P is likely to have a little pullback in a minute. So we're starting this pullback on the Dixie. So we'll see how far we get. we could quite easily fade this entire move before New York. So S&P will see starting to probably pop back up in a minute, as the Euro's doing. Euro New Zealand 150 ADR. Blimey, that's still going. Euro's still on a mission. That all the Euro pairs. I don't know what is going on with this Euro. I really don't. It feels like a squeeze. Just squeezing the shorts. New Zealand's coming down. The US is obviously going up off the non-farm. Aussies aren't going anywhere. CAD went negative on that news. So the actual news for the CAD was negative all round. And obviously mixed on non-farm. Positive, mainly non-farm. But it's just not got the impact non-farm that it used to, unfortunately. It used to be an amazing news event. And it's just since COVID hit, we've just not had the volatility, unfortunately, on it. But anyway, everyone still gets excited. I still get excited about it. It just doesn't really do much. So spread your trading capital with different brokers. Yeah. If you've got enough trading capital to spread, that is. Obviously, if you're trading with a smaller account, it doesn't really matter. I just wouldn't keep a large sum in a broker. Yeah. So when Alpari went bust in the Swiss franc peg removal, I had at the time, I think I had somewhere around 5 to 8k in there, which was all my trading account. It was everything. And obviously Alpari went bankrupt as soon as the peg was removed. And my account just locked. I just got locked up, and that was it. That was me done. So there. So I was in this, luckily, short, but it didn't make any difference because I didn't get the money because they went bust. But that happens, yeah. Can you imagine being long in a broker without a stop loss, or with us? Doesn't matter if you had a stop loss in this. It doesn't matter. Your stop did not get honoured. There was no liquidity to fill the stops. That's why that happened. If you were in that with all of your trading account, yeah, and your broker goes bust, you have to go to the financial ombudsman to get your money back, and then you're only guaranteed 50k of your money. It will take you months. I had to go through litigation, through solicitors, through accountants. It was KPMG accountants were looking after all the customers. That day, I said two things. One, I'm never trading the Swissy again. I do now, but I didn't trade it for 2 years. I didn't trade the Swiss franc after that. And I vowed never to put my money in a broker again because I couldn't trade. I literally couldn't trade for 3 months. My money went. In fact, I did. I put some money on my credit card because I wanted to trade. But I got my money back. It's not a problem. It's just things like that, where every now and again, things like that will happen. War breaks out. If war breaks out and there's a massive dump in an instrument that you're in, I've just gone flat on that S&P. You're gonna lose that money. You're not going to have access to it. You're not necessarily going to lose it, but you're going to lose access to it. If you're trading for a living, I need a fallback. If my whole money, my whole balance, my bankroll goes into one broker and he ties it up, I've got to pay my mortgage. Still got to pay my mortgage. So, don't put it all your eggs in one basket is the moral of the story. Let's see what's going on with Euro. Whoops. So Euro, we are back to 61.8. We're getting back to 50 on the Dixie. Slow. See what I mean about fading these moves, yeah? Concentrate on the right chart. So basically they're just fading back the entire NFP move. And the liquidators, if you like, that started the move should start to step in now and power the US dollar up. Or just wait for it to cobble back to here, and then hopefully New York will take it off. So when you're looking for a broker, as customer service just said, there's a few good brokers out there with good reputation and good margin. You basically look for a broker that's been established for a long time. Ideally, you want a broker that is regulated by a regulator in your country. That's not always possible because you don't get the liquidity and the margin. So you can only have 1 to 30 leverage in the UK, which is no good. I can't trade with 1 to 30, so I have to go overseas. And just look for an established broker. So, you know, the big names out there. If you see the same names popping up on Forex Factory everywhere you go, if you see the same names popping up all over the place, they're usually a good broker. So people like IG, Darwin X, Pepperstone, Axie, CMC Markets, IC Markets, Blueberry Markets. I mean, there's loads of them out there, the big boys. If you stick with the big boys, you'll be fine because the big boys don't muck about. Well, they all do. They all muck about. That's a lie. They all muck about, but they don't muck about, and they're not as bad as the small brokers. The small brokers are all about spreads and margins and getting you margin called and getting spreads to take people's stops. That's why you get different feeds on different brokers. It's because the spreads have gone wider on some brokers than others. If you're scalping, you need a tight spread. So if you've got a spread like that on you're looking to scalp, that broker's not for you. You know, just use your head, really. I get a panic attack with non-farm payroll. What of these brokers that are abroad? Yes, abroad. I only trade with overseas brokers. So I trade with Axie, Pepperstone. I mean, Axie, Robo4X are in Cyprus. Axie are in Australia. So yeah, if you want to get anything more than 1 to 30 leverage, you need to go overseas. But talk to your broker. You know, if your broker offers you a 1 to 30 leverage, pick up the phone. Yeah, there's guys at the end of these brokers. There are account managers there. Pick the phone up and say, I'm in the UK. 1 to 30 leverage isn't going to cut it. Do you want my business? Yes. Okay. Have you got an overseas office in Australia or Cyprus? Yes. Can I have that, please? Yes. They're not going to turn you away. You're just not going to be regulated by your country. So you need to check the regulation in Cyprus or wherever it's held. So with Robo4X, for example, where they are, all client accounts are held in Barclays Bank and regulated by the governing body. So your money's safe as it can be in trading. I mean, it's never safe, is it? You're putting money on the line every time you hit the button. But yeah, just, you know. Mine is abroad. I'm Canadian and my broker is in Australia. Yeah, registered in the Bahamas. Yeah, none of these companies will be where they are. You know, they've all got, most of these companies are overseas. Yeah, so this is Robo4X, who I'm with at the moment. I don't know where they're based. You know, take your pick as to language, but they are in Cyprus, Gibraltar, and Cyprus again. What governing body are they? It'll be there somewhere in the small print, but you know, another good way to tell if they're a good broker. Do you see their name slapped all over football teams? Yeah. Lots of these brokers now are on, like eToro. They sponsor a UK football team. If they're big enough to stick their name on a big team, they're big enough. And look at the websites. I mean, they partner with BMW Motorsport, for God's sake. They're a big broker. That's all you got to look out for, really. If you can't pick up the phone, you can't talk to them easily, don't do it. So we're getting the pullbacks at the minute. Dixie's coming back to 61.8. So we're just fading these. So again, the play on these quite often is just a fade. But obviously that fade will stop at some point. Potentially do that. Obviously, it can also, we don't know what it's going to do, but typically we'll fade and pop from there. We're going to wait until New York. We've got 15 minutes. If a broker is backed by a big bank or institution, they're safe. Yeah, basically. UK doesn't have over 1 in 100. UK doesn't have over 130. Our maximum leverage in the UK by the Financial Conduct Authority, is it the FCA? It is the FCA, isn't it? Yeah, is 1 to 30. What do I think about active trades? Never heard of them. Active trades. Just waiting for this market to pull back, basically. And might start shorting it again. Active trades. They've been around since 2001. Okay, I've just clicked on their link, and that's what I've got. Okay, activetrades.com. The page you're trying to access is temporarily down for maintenance. Brokers don't go down for maintenance that I'm aware of. That was not good. So the first impressions, not great. The website crashed. Best Forex Broker UK by the IAIR Awards. ADVFN International Financial Awards. Go and check out these awards. See if, I've never heard of them, but see if they're any good. You just got due diligence. So these are in the Bahamas. Headquartered in the UK, but they're actually based in the Bahamas. Regulated by the Securities Commission of the Bahamas. Yeah. I mean, the rule is if you're in the UK and you are dealing with a broker that is in the Bahamas, yeah, they're regulated by the Bahamas brokers, by the Bahamas Securities Commission. I have no idea whether that is a legitimate, trustworthy source or whether it's highly corrupt. I haven't got a clue. Therefore, I will give them some of my money. They're audited by Price Waterhouse, so if they're audited by PwC, you're probably all right, I would say, with them. They've been going for nearly 20 years, so yeah, look good. Wasn't particularly impressed by their website crashing as soon as I landed on it, though. And look, 80% of their customers lose money. That's the same on all brokers, so you'll find that everywhere. It's true. Okay, so we just we faded the gap. Just take this fib off. We know we're above 61.8 now. So so we just faded the gap there. Dixie, we're stopping at 61.8 at the moment, but probably still fading that. So the moves are all undone. Back to square one. Pound's got a little bit further to go. CAD's not come down yet. We've had a weak CAD, obviously, so that's not come down as much. Swissie's made it back down to support, so we're bouncing off support. US dollar yen hasn't got very far, has it? That's got down to support as well. So this could be the bounce point. I'm going to try to take one short. bit of a big TP, isn't it? Starting to reverse. The country code on the phone number is their site in Singapore. Yeah. These people are all over the place. It's the banking sector, basically. They're all over the banking sector, so they're everywhere the banking sector is. And obviously, to avoid regulation, when a country brings regulation in, like Australia's just brought in new regulation, so all the Australian brokers basically move all their accounts out to Cyprus and the Bahamas. So my Axie account was in Australia because I could have 500 to 1 in Australia. Australia turned around and said, "Nah, you're not having 500 to 1 anymore, mate." So they moved my account over to a different country because I said to them, "Well, I don't want to drop my leverage," and they went, "All right, we'll move you somewhere else." Because they want to keep my business, basically. So the rule of thumb is, if you want to trade, they will do as much as they can to make you trade, because every time you hit that button, you're making them money. Every time I hit the button, they make 40 cents out of me. So they're not going to say no. They're not going to not help. They will always help you move. Leverage in France is 1 in 30 as well. That's why I use a broker in Australia, 1 in 100. Yeah, if you're, I've got 1 in 500 with Robo and with Axie. I've got 1 in 100 with some other accounts. 1 in 100 is more than enough to trade with if you're using stops and scalping. When I'm scalping and I'm scaling into positions, I can get into a maximum of about 10 before I hit a margin. So I could get in 10 short positions and then I'll hit a margin. If you've got 1 in 100, you'll probably be able to get into 5 positions with a 0.5% to 1% before you hit margin. If you're position trading and you're holding longer term, you're going to need to have a 1 in 500 leverage. Otherwise, you're going to get to a point where you're going to hit margin and you're not going to be able to get any more positions on. If you can't put more positions on, you're going to find it very difficult to be a position trader. So different types of trading needs different types of accounts, really. To be honest, I think 99% lose money. Only 1% will come out of this game a winner in the long run. Yeah. The statistics you see on websites, yeah, these statistics here, I think is talking about what I just said, the 60% of people losing 60% of their balance in 60 days, or 90% of people losing 90% of their balance in 90 days, whatever you want to do. It's the diminishing returns, yeah? You put 3K in an account and you lose 10% of it. So now you're down to 2.7. So you up your lot sizing to get that back, which makes you lose faster. So now you're down to 2K, which means you up your lot size more, which makes you lose faster, and now you're down to 1K. What happens when you get down to 1K is you either blow your account or you cash out and give up. That's that. Yeah. The other 81% are the stick $100 in, quadruple it in a week and draw it out type people. And me. People that leave their money long term and grow their accounts. I think that's the way that they do those maths. More than 1% of people make it as a trader. I know that for a fact because I've met a lot of people over the years and I know a lot of people that are still doing this and still making money. But there's different types of making money. There's a lot of people I know that trade Forex part-time and make a good living out of it part-time, a good extra income, I should say. But they still have a job. I've got people I know that run businesses that trade and make an additional income out of it. And I know people that trade full-time and make money full-time out of it. But out of the hundreds and hundreds of people I've met over the last 15 years trading, or 13 years, however long it is, 13 years, I'm in contact with less than 10 that I've met along the way and become friends with. Who are still trading and who are still making money. And that's because they stuck at it for years. And I said that in my video, didn't I? In the live room last week, I went on a bit of a rant about it. You can't, if you minimum, bare minimum 2 to 3 years before you become profitable. And before everybody says, oh, I've just opened an account with 1,000 and I've now got 1,500 in it. Well done. Lucky week, lucky month, lucky quarter. Consistently profitable trader will be able to trade for 3 months solid without losing. Yeah. And I don't mean losing. I'll have a losing week, have a losing month. But overall, in 3 months, you start with a balance of X, you have a balance of Y at the end of it. Profit. Just about to stop out the S&P. We're just about to open. I'm not going to do any futures this afternoon. Because I had a nice day on the futures yesterday. I made a load of money. I can't remember how much did I make yesterday. $800, I think, $700, something like that. So I'm not going to trade futures this afternoon. Friday afternoons is always a really tricky, I find, quite a consolidatory period. Market's opening in 5 minutes. So I might do a little bit more scalping in here and just do some CFD scalping this afternoon. And to see what happens with this, with the US dollar. And keep an eye on it basically at the open, but I'm not going to do any futures. Do you leave your profits in the account and then trade it and grow it by compounding? Well, no, I've grown my account. I basically draw out of my account each month. But yeah, you could compound it up if you want to, more and more and more. Obviously, what I'm doing here is compounding, yeah? So this account that I'm trading here, which is now 5380, this was $2,000 whenever it was. I looked at it a minute ago, didn't I? 23rd or something of January. So I've been trading this for about 2 weeks. I'm compounding this, obviously. So this is why, as I say, I keep saying it, concentrate on percentage profit gained. Yeah. That is the magic number. Yeah. This gain here is the important thing. I'm looking to return a gain every day. I don't care what this is. This is totally irrelevant. Money has got nothing to do with it. Pips mean nothing. Money means nothing. If you have an account and you can get a profit percentage increase on it, when you hit that button, when I hit that button there, right, it will risk that of my balance. I don't care what my balance is. The process I'm doing when I hit this button is the same all the time. If this was a 100k account, I would still be trading it exactly the same way. So you need to get used to trading this way, because if you start trading with an amount of money and you concentrate on the finances of it, you're not going to get very far, because what's going to happen is you'll get used to taking £30 wins, £40 wins, £50 wins, etc., etc. But what you will find is when all of a sudden you're trading a twice the size account, you'll still be concentrating on £50 wins, £100 wins and that sort of stuff. And you're not actually making anywhere near as much. You need to concentrate on risk as a percentage and returns as a percentage. I lost 0.5% on that trade. Yeah. $27. But if that was a 10k account, I'd have lost $50 odd, 0.5%. So yeah, if you want to compound your account, yeah, just keep trading the way you trade and using a percentage of your account for every entry that you take. And it will automatically grow. But if you want to make a living, you've got to extract this money, haven't you? Because you've got to pay your bills. Got 1 minute to the open. Let me just switch over to scalping layout. Wow, why is that all weird? I'm I'm just going to close this. I'm going to use my EA now because I like my EA. I've just got into a new NASDAQ position on that push. So I had a sell stop underneath the lows down here. This is a long-term hold position, so I'm just going to let that run. What are we going to trade? Let's trade the NASDAQ. Why not? Oh, it's because I had that open. There we go. That's why. Don't need the panel open. Right. We're off. Actually, I'm going to let... Actually, what I'm going to do, I'm going to trade the S&P. Sorry. Yeah, let's trade the S&P. So I don't want to get confused with my P&L on the NASDAQ. Everything changed since I learnt from you to use percentage. Been much better. Yeah, percentage is king. Percentage is definitely king. It's how you grow your account and how you become used to making money, because you need to de-acclimatize yourself from the financial part of trading. You need to concentrate on processes and strategies, and not concentrate on the financials, because the financials are no use. So I'm just making some changes here. The financials are not going to help you, they're going to hinder you. I can't adjust that position. I'm going to knock it down. Oh. See what we're doing. Right. Are we really open? God, this is a slow open again, isn't it? Euro is in free fall. Excellent. Yeah, we're flying back up again on the Dixie. I wouldn't exactly say it's a free fall, but yeah, it's coming down. Yeah, so we basically we've done the fade. So I'm expecting now lows to get broken and we'll trend down. That's what I'm expecting and hoping. And obviously the Dixie will do the counter. So indices, we have pulled back. I haven't got the 32 on here on the 24, but we've pulled back beautifully into the 24.72 area. And we've done a lot of today's range already. So we could well just grind back up again today, but it's looking like a bear market. It's certainly looking like a bear market at the moment. So looking for shorts. So what have I got today? 10%. Right. So just waiting for an opening range to be established to see where we're likely to be headed. So we've pulled up basically on the S&P. We've pulled up into resistance, and we're starting to barrel out of that resistance. Nice break there. Going short one. Oh, short one. What's that? I just put on there a line. Nice bearish engulfing off of the 50 and the 20. See if we get an opening straight away down opening. We're definitely in a downtrend at the moment, so this is a perfect spot to be continuing down from after that pullback. Another way you can obviously look at your trading is in points or pips if you want to, take an X pip stop and an X pip profit. So watch this figure. Just closing that one out. Close. God, it's slow. So yeah, just as long as you're concentrating on a number rather than a monetary amount is kind of what I was saying earlier. If you're concentrating on a percentage gain, percentage profit, or a pip count, point count, whatever you want to call it, focus on numbers, not monetary amounts, because they are completely impartial to your account and your reality as a human being. Yeah. So, when I make $500, yeah, I'm like, okay, I'm a quarter of the way towards a mortgage payment, right? That's you equate it to things. If you've suddenly made £50, it's like I've just made a meal out. Your meal out is going to be 50 quid, whether you've got a 10k account or a 50k or a 100k account. 50 quid is still a meal out, but a percentage gain on your account is equivalent to the money, and the money will automatically grow with your account if you concentrate on the percentages. But a lot of people work in points as well. Yeah, you're looking for a 10-point gain per scalp. You want a 5-point loss per scalp. You can look at it in that way as well, because at the end of the day, it's going to do the same sort of thing, as long as you're taking your trades with a percentage risk. And also you're risking the same amount as every time you're doing it. There's no point in what some days going, oh, I'm going to go in with 0.5 today because I don't feel confident. If that's the day where you nail it, you're making half as much money. If you go in with 1.5 because you're feeling cocky, that's the day you're going to lose. So pick a number and stick with it. I'm always around 1 to 1.5%, depending on the instrument, depending on the speed. If we're in slow market conditions, I tend to risk a little bit more, but I will also get out manually a lot more. If I'm in a high speed environment, I tend to risk less, but let my stops get hit more. When I'm scalping, that is, obviously. So it's different. Like there, you see, I got out there, because then, like, look at it, my stop was up here. Wrong decision in this case, possibly, but I'd rather get out with a $39 loss instead of a $50 loss. 5 of those trades is a free one, isn't it? If it doesn't look right, I'm just not getting in. Still no strength in the Dixie. Okay, push back up towards the 15-minute highs. So just trying to go bullish at the minute. It's breaking back above, well, trying to get above the 50 and get above this high. US dollar's coming down. Euro will be going up. Probably after that non-farm, I'm not sure we're going to get a lot this afternoon. It's a bit of a damp squid, wasn't it? Again. So 44.88 level is next resistance on the S&P. If we break that, potentially coming up there. Okay, I'm going to look for signs of weakness here on the 1 minute. See if we get an opportunity to short it. Pushing up through these highs. Decent move on the indices. Okay, I've got 1 minute left on this 5 minute candle. This is the 15-minute range going in now. So see if we can hold this high. I'm going to try one short of the highs. Just get ready to close it out if it pushes up again in the next 30 seconds. So the highs have held. That's not a very straight line, is it? What the hell? Still holding the highs at the minute. Just teasing in higher highs, but not really convincing at the minute. It's running out of steam a little bit up here. Decent bearish engulfing, probably see a pullback back down to this high, potentially back down to this wick here. So we're going to put a propulsion gap in here on the close of this candle, which will probably be faded into. The Nasdaq's still pushing. I can just tell by my P&L, look. Nasdaq's going up. I decided to run my long-term positions in this account. I've taken one off today, actually, Nasdaq. What I'm going to do is I'm just going to keep shorting it at strategic points every day. And when I get to kind of around about 3 to 4% profit, I'm taking each position on and off and putting it back on again. So rather than putting that big position on I was talking about, like just piling into it with a 5k loss up at the top, what I'm going to do is just keep scaling in. I've got my pending orders in. So as it pushes down, I'm getting in pending short and taking it off at 3%. As we push up, I'm scaling into a position and getting out on each of these as it hits 3% on the way down. So I'm just going to do it that way, basically. Selling one more. So I can just build the bank up rather than getting in with one position, because what I know what's going to happen. It's going to get into about 5 or 10k in profit, and then I'm going to want to take it off anyway. So I'd rather just bank it every day rather than leaving a big one on. I think it's a better way to trade it if we are going to get this drop. So every position I get in theory, is going to make me 3%. If I can get 3 positions on a day, I'm going to make 10% a day out of the drop. If it's going to drop, we still don't know, do we? It's looking like it at the minute, but who knows? What's the Dixie up to? So I got more buying on the Dixie. Euro will be coming down. Euro US dollar anyway. So there's that propulsion gap got in now. So looking for a pullback into this area, potentially. Adding one more. Critical spot coming up. Okay, closing one out. See what happens when we get down to the 50. Pulling down nicely into this area now. Okay, closing that out, 1.3%. Wait for a pullback. This area here, basically, obviously, if we're going to continue bullish price action, this is where we'll be meeting the buyers to propel it north. If we are just going to put in a high and drop today, that's likely where we're going to drop from. So I don't know which way we're going yet. So price action is either going to be that or that. So take that one off there and just wait and see what we make of the next move. So potentially we're going to hold and just trend. So I want to see a break down really below that level, which will confirm bearish price action. Just don't forget, you know, we've moved a long way today already on the daily. We've put in a big day so far. So we've quite possibly done our range today. So we could just sit and rotate today. But at the moment we're just chopping. So US dollar trying to make new highs. Right up at the London Open, London close, London high even. It's not closed yet. I'm still here. So we're just testing those highs at the minute. Should get a nice little pop through there, hopefully. Euro US dollar will be coming down. Testing the lows. Have you ever read Al Brooks? Yeah, years ago. He is the godfather of candlesticks, godfather of price action. Very, very good. Still around, still does live talks. Yeah, have in the past. Al Brooks has kind of been instrumental in my understanding of market structure. So I'd go and read. I can't remember what his book is. But yeah, I have read Al Brooks. Worth a read. Read everything you can read. Yeah, just read everything. Because you need a lot of knowledge in this job. Selling one more. We've got 3-bar reversal potentially forming. And we're rejecting here. Pushed up. Looking to push back down again. See if we can get a break below these lows. Do I use currency strength index information for your trading? Only use the COT report. Currency strength meters are useless. Well, I find them useless. They're not useless. I mean, if you find them useful, they're useful, obviously. Anything, same as any indicator you use. If you find it useful, it's useful. But currency strength doesn't tell me anything. Just closing that out. Currency strength doesn't tell me anything I can't see. Yeah. So I can tell you for a fact now that if you look at a currency strength meter, it will tell you that the US dollar is strong and the euro is weak. Because the euro US dollar is going down, for example. So currency strength meters tell you what you can see on your chart. People try to use currency strength information to get an edge on the market. You can't, because it lags. Yeah. When something goes down, yeah. So let's say, for example, the currency strength meter says here it's at 1.9 or whatever, however it measures it. It's got 4 bars instead of 1 bar, or it's the block's that big instead of that big. However your meter or your information is displayed to you, it's telling you at here it's at this. Yeah. As it goes down, it gets down to 1.7, then it gets down to 1.5, and then it gets down to 1.3, and it says, oh, it's getting weaker. I know it's getting weaker. It's going down. I don't need a meter to tell me that. So yeah, I don't use them. Because price leads everything. Price leads everything. When this is going down, price is going down. Yeah. When I get a reversal alert of my market reversal alert indicator, it's the start of a potential shift in market structure. So this indicator is telling me when things are likely to happen in the future, not what has just happened. And this is why a lot of oscillators are utter rubbish. Yeah. Stochastics. To put stochastics on a chart. Yeah, all a stochastic does is tell you what's happening with price, yeah? Look, it's going up. I know it's going up. I can see it. Look, it's going down. I know it's going down. I can see it. Look, it's going up again. I know. I can see it. Useless. Moving average crossovers. Useless. By the time you get a moving average crossover, the move's happened. Useless. 90% of indicators are useless. Here, look at this here. Everybody plays moving average crossovers. When the 20 crosses the 50, go long. No, I've missed it. This is where you go long, when you get a 3-bar reversal or a market reversal alert telling you the market's about to go long. Don't go long when the thing's gone long. Likelihood is going to pull back. Everyone goes, oh, I'm going to go long there. Boom. Yeah, all indicators lag. Yeah, I got out of that trade there because I saw bullish price action. Market was telling me price is going up. Oh, I don't want to be in short. It's going up. Yeah. So that's why I don't use currency strength. I've tried everything. Literally. You name an indicator, I've traded it. But I can't say it's a bad indicator or a bad system or a bad strategy because I didn't find it useful. But that doesn't mean that you won't find it or anybody else won't find it useful. You have to try everything. The bits that works and make you more profitable, you use them. The bits that don't, you discard them. And after a certain amount of time, you'll have such a massive bank of knowledge of what works and what doesn't and what tells you the same thing as something else that you will suddenly go, right, all I need is this, 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 and this. And suddenly you'll realize that a system is made of 5 moving parts and you just need to find the indicators that tell you those 5 parts and you're done. There's a video on my YouTube channel about it, what a system is or what a strategy is. It's just a combination of moving parts. Rejecting the highs again. Looking for a break. So we're potentially forming an M. Going to sell one more. See if we can get these new lows. Don't get me wrong. If you like currency strength and you're finding it's helping you understand what drives the Forex market, use it. Yeah, it helps you. It helps you a lot to understand how the market moves. When you see currency strength and you see price has gone somewhere, it all kind of clicks that the fact that if the US dollar is powering up, everything against the US dollar will come down unless it's powering up as well. So if there is news on the Canadian dollar which makes it go long and news on the US dollar that makes it go long at the same time, you will see the US dollar CAD go sideways and all of a sudden things go, hang on a minute. That's why that's consolidating, because they're both pushing at the same time. They're both being manipulated at the same time. So it has that sort of helpfulness that it educates you and makes you understand how price moves. And there's lots of indicators like that will help you to understand price movement. It takes a while though. You got to watch it. You just got to watch it and try. The difficulty is everybody gets in too late. Everybody constantly says, and I've said this in the past thousands of times, why is it when I hit the sell button price goes up? And why is it when I hit the buy button price goes down? And it's the biggest problem all traders have. And the reason is simple. You see price go up, so you buy it. But you don't realize you've bought it after it's moved up. And then it needs to come back down and breathe. Yeah. The reason I took a short there is because I am preempting and anticipating that movement. So I'm getting in short. I might be wrong. If it goes up there, I'm out. No problem. But if I'm right, I'm going to scale in to multiple positions, because when it confirms that pattern and I'm right, then I make a lot of money. So, I'm wrong a lot. Wrong way more than I'm right. But when I'm right, I get in hard when I'm scaling in and make that move pay me lots and lots and lots of money. And just get chipped away constantly by movement that doesn't go my way. So, reduce, don't take maximum stop losses. Just take something, admit you're wrong when you're wrong, like that, and get out. And you make your money on these propulsion moves. Chop is where everybody loses. I lose. You just see me lose. Just lost twice. Nothing you can do about it. So we're just contracting up here at the minute. Just accumulating ahead of the next move. One way or the other. Nasdaq is still rising. US dollar is undecided still. I think what I'll do, just going to give it a little bit more breathing room. I'm just going to have one other go at this, but give myself a bit of breathing room. I don't actually need that much. We're just chopping at the minute and wicking around, so I don't want to keep getting stopped out. Give myself a bit more breathing room with a little bit less position size. Another good, actually, talking about currency strength. I've talked about this before in the live room, but another good website you can use is IG's sentiment report, which shows you what positioning all the intraday traders have got. That is very useful for taking contrarian positions to the masses. Obviously, we know for a fact that 80% of people roughly are wrong because they lose money. Therefore, if you do the opposite to what they're doing, you've got a much higher chance of making money. So IG sentiment report is something that's worth looking at on a daily basis. That tells you which positions, which way basically retail is going. And the market tends to go the other way. Nice rejection wicks on the 1 minute. Sellers stepping in. Still no movement though. We've been stuck sideways for 25 minutes now. 20 minutes. Okay, we've got 40 seconds till this candle closes on M5. Still total indecision. Can't get any more contracted than it is. It's about to go one way or the other. Short one more. Okay, we need to break these lows and we need to break out below this propulsion gap just to make sure there's no buyers left in here. If we break that, next stop is there. Then lower to the day. Why is that drawn two lines? Average price, break even, sell level. Average price, break Break even sell level. Oh. Don't need that anymore. Got my own. Trying to work out why I got two averages. Right. So if you just come in the room, I'm just testing out a new EA I'm building, and it's not finished yet. Just holding on the 20 on the 5 minute. I'll finish this trade and then we'll have a quick look at the IG sentiment index, if you like, and explain a really cool way to use it that you can do every day. We're getting some good buyers coming in off of the 20 at the minute. Still haven't made a new low, so market structure at the moment is still bullish. Oh God, still bulls. Closing. Oh, this is just going to be chop today. I'm going to give it all back. I'm not going to trade this anymore. It's just chop. We're nearly half an hour of just accumulation. So this thing's not going anywhere at the minute. So the IG sentiment index, if anybody's interested, you can get at dailyfx.com/sentiment report. I'll put a link in the chat. If you're interested in it. But basically, I've got this enlarged really big. The website is not this big. I have it enlarged because it's important to see, what's this on, 150, yeah? So this is the normal website, right? And this basically just gives you information as to the directional bias of all of IG's customers. IG are the largest broker in the world. They have the largest retail client base. So this basically tells you the directional bias of all their traders. Yeah. So euro pound, for example, 63% of their customers are long, 36% of them are short. Euro yen, 75% of them are long. That's coming down. Yeah. Because 80% of customers are wrong, aren't they? They're all long on it. What do you think it's going to do? It's going to come down, isn't it? So that's basically an overview. But the way that you use this, which is why I have it set to 150%. Oh, I can go 175. Yeah, even better. The way to use this, you can see here, this line here is the traders, retail traders. This line here is price. So as the retail traders buy and enter long positions, price goes down. When the retail traders go, actually, we were wrong, let's sell it, price goes up. Yeah. And the same thing happens over and over again. We buy, price goes down. We start to sell, price goes up. And then we go all out selling, price flies up. And then we start to go, actually, we'll go long, price comes down. We go, oh, hang on, no, it's coming down. We'll go short, it goes up. Then it goes, oh, hang on, no, it's going up. We'll go up, we'll buy it, and then it comes down. Yeah. That's what I was saying about earlier. Yeah. Why is it every time I hit the buy button, price goes down? And every time I hit the sell button, it goes up. Yeah. That is why. Because you're doing it wrong, basically. So what you need to do is do the opposite to what these guys are doing. Yeah. And the way that you tell that is by this little line down here. This is the percentage of traders net short and net long. And this is updated every 4 hours. Okay. So this is the 12 o'clock update. So as of 12 o'clock on Aussie dollar yen, loads of people were exiting their shorts and also exiting their longs. So there was no directional bias. They didn't know which way they were going. It's accumulation. Yeah. So what you need to do is you need to look through this and you need to find the ones where you've got an opposite bias. Here, perfect. What's this? Oil. Right. So there was loads of people exiting their short, going short rather, and exiting their longs. Yeah. So the market is going short. Right. So everybody is saying, I'm going to short oil. What will have happened to oil in the next 4 hours likely is oil would go up. So I don't know if I've got oil. Might be on this one. Yeah. Because everybody's short. Everybody in the market is short oil. They're entering shorts and they're exiting longs. So more people are coming in short. And that's what you do. So every 4 hours, so this one, what's this? Germany 40, the DAX, right? So the DAX, everybody in the last 4 hours has gone, I'm shorting the DAX. I'm going to sell the DAX. I'm selling the DAX. And everyone's going, I'm going to long the DAX, right? They're exiting their shorts rather, and they're going in long. So everybody's longing the DAX. Where is it? Where's the DAX? There it is. Down. So it's basically just a contrarian view. Yeah. If we know for a fact that 80% of people get it wrong, why not look at the largest broker in the world and see what those 80% are doing right now for the last 4 hours? Because the likelihood is, as we can see here very clearly on the chart, whatever they do, the market does the opposite too. Yeah. So good little tool. The problem with it is you have to check it every 4 hours. The other problem with it is a lot of the times you'll find there's no signals like there. There's no signal there. No signal there. Actually, that could be a good one. Euro pound. So euro pound, everybody's exiting their longs and going short on the euro pound. See, that is starting to play out. But we've got massive divergence on that, haven't we, as well? That one is kind of where the market's getting it right, because it has been going up an awful long time, hasn't it? So, but yeah, so good tool to use. But again, it's another tool that tells you what it sort of shows you how the market works, shows you what the market is doing and why it's doing it. Yeah, so the market needs to power up its moves. So it gets its moves from retail traders entering stops and pending orders in the market, and it goes and accumulates all those pending orders in the market, and then it shoots off in whatever direction it wants to. To be able to accumulate those orders, it has to be manipulated up and down to grab them. So when you're going short, yeah, every time you hit the short button, you're adding a stop loss. So what's the market do? It goes up and grabs your stop, and you go, it's pushed up even higher. It starts to come down. I'm going to enter short. You put a stop up there. So the market continues to go up because everybody's going short, because all the pending orders are up there. Stop orders, they're all up there. When it runs out of stops and everyone goes, actually, nah, we go the other way, you start buying and you put your stops underneath. So the market comes down and grabs those. Yeah, really good visual representation of what's actually happening under the hood. So I thought I'd share that again. I've shared it a few times in the live room. I always get lots of DMs after I share that, because people go, what? Really? It's rigged? No. It's not rigged. You just need to understand how it works. Right, so S&P, new high of the session. So I think I might look for longs. Although it's not really moving very far, is it? We haven't really got any movement at the moment. So very difficult to trade when it's moving this slow. This is what we've had for a few days. When I've been trading futures for the last 2 or 3 days, we've had this horrible opening market where it's just been super choppy. Very, very hard to trade. So I'm going to kind of stick with what the market's doing. Great example of that moving average crossover I was talking about. Look, 20's just crossing the 50. We've been going up for how long? Hour and a half. So yeah, a bit late moving average crossover. But now can start playing pullbacks to it, potentially. But I still fancy it down today, I really do. But we've put, the trouble is today, as I say, we put the range in already. We've already done a decent 60% ADR move today. And for a Friday, that's a pretty good move. So we might have had it today, and we're just going to sit and rotate. What's Dixie up to? Yeah, we're not going anywhere. Dixie looks like it wants to go short. Back down into this area. We have made new highs, so market structure is ever so weak. Anything else moving? No. Nope. Wow. Friday afternoon, people. A little bit of euro strength coming through, ever so slightly. Pound, that's off the back of the CAD. No movement, nothing's happening. So we are, what, an hour in to the open. We ain't getting anything. Dull. I might have, let's just have a quick look at the NASDAQ. So NASDAQ, obviously we've had the down day today, so it's triggered me into my position, which was at the yesterday's low. So I've entered yesterday's low looking for the lows. Got three more sell limits. One is roughly at the open. At the close of yesterday. In there. Approaching the highs of the pullback, and then one kind of, actually that's slightly in the wrong spot, that one needs to be up there. So there, basically, just before we get to that potential resistance. So that position there is anticipating a double top bounce back down, which would be an M pattern reversal. So got one up there in case we come up and try and do a double top. Got one in case we do a 50% pullback on the move. I'm just about to get into another one here, anticipating just literally an accumulation drop, and that was the one I was anticipating collapsing from. So those are my 4 positions that I'm looking for. And obviously the long-term play is 30 to 50% drop. And I will keep adding as we get down, as we keep going down. So the plan is to try and keep these positions open which I'm finding really hard. I've taken 2 of them off already. But so what I'm going to do is basically, if this gets down to here, for example, I will take that position off, add another one on, and then add this back in, so that if we pull back and drop, and just keep playing that basically, assuming that we're going to get the full collapse, which, you know, is potentially, people are talking back to COVID high. It's a big way down, isn't it? Long way down. It's going to take a year potentially to get there. But market structure, yeah, this is the first reversal we've had. If you look at the market structure, yeah, we had a little symmetrical triangle break there. Low, new high, higher low, higher high, higher low, higher high, M pattern reversal, lower low, higher, lower high, lower low. So the market structure shift has started. It's the first time we've done a new low for over 2 years. So forecast is similar sort of collapses to the ones we've had 2015, 2016, 2018. But bigger. They reckon bigger. So we'll see. I'm not sure we get down here. I'm really not sure we get down here. But if we do, we can make some money on the way down. What account am I in this account? Okay, we're bouncing off the 20. So, should we assume we're going to have a little long day? Continue this trend up. Not convinced. We just had a bearish engulfing on M5. Sorry. So it's just mixed signals today. Really is mixed signals. Not conducive for trading, is it? Tempted just to run with my 8% today. Now it's coming down. Look. Yeah, too late. Not chasing it. Nasdaq's coming down hard as well. What's that? 230. Okay, I'm going to go short one. I'm going to give myself plenty of breathing room on it. I'm going to look for a pullback to add. So I'm going to enter second position if we get the pullback on the 1 minute. So looking for this level here. Oh, come on. So we have just broken structure. Just. So should be looking for, if we're going to break back down to the lows, that sort of movement. I'm giving myself a nice big wide berth on this one. I'm scaling to multiple positions on it. Chris, I don't know if you're in here. No, sorry, not Chris. Rick. Just messaged me on Telegram. Have I had a signal on Zulu trade? No, not me. Definitely not me. I've been on the Zulu trade. I've followed signals on Zulu trade, but I've never had a signal. I don't do signals. You never make money learning following signals. So basically flatlining now on the moving averages. Good sign of potentially going into a range at the end of the day. Zulu trade. Just looking them up. I haven't looked at their website for a long time. They've been around a long time, Zulu trade. And they're still around. Ava Trade as well. We're talking about brokers earlier. Ava Trade and FXCM. Other good brokers. For trading. Loads of them about, but anyway. Do your research into brokers. Oh, I was really I was toying with the idea. You probably hear it in me when I said there's a lovely bullish engulfing there when I was thinking about taking a long. I was so close to hitting the button. That's exactly where it was just about to get hit. And then it dumped. Never mind. So I'm entering on M1 here, but I'm actually trading M5, which is why my stop's up there. So I'm going to enter another entry there. So scaling into the position on a pullback. Normally I would only add to positions. But if we do get up to there, it's a perfect entry spot. And obviously I'll have a very, very, very tight stop on the second position. So it'd be very, very low risk. M30, we've got nice rejections of the London highs. Straight out of that sell zone. Short one more. And shorten again. See what happens when we get down there. See if we find any resistance down here in the buyers. B Master, what time frames do I focus on? When I'm scalping, M5 and M1. But normally, most of my trading is M5. H4 and H1 with entries on M5 and M15. EA's just keeping an eye on this as well, but EA's just closed out Aussie dollar CAD as well. So those two positions. Okay, so we just tapped into the lows of New York. So let's see if we can break these lows. If we do break these lows, we might get a nice little pop out the bottom. Knocking on the door. Okay, we've broken it. Adding one more. Let's pull the stops down. So the stops are now just above these highs. So anticipating a pullback now. Potentially. Thanks. Just bought your ADR scanner. Love it. Cool. ADR is good. ADR is also good. ADR is really good for scalping. One or two things tends to happen a lot when you get to ADR. When you get to ADR and you see signs of reversals, obviously it doesn't mean it's coming down. A lot of the time, obviously, we do. You know, good 50% of the time you get the bounce off of ADR highs. But if it doesn't, what you quite often find is you go into a slow, grindy range, which is really easy to trade and scalp in both directions if you wanted to scalp. But yeah, ADR is good. What's Bitcoin up to? We haven't looked at Bitcoin today, have we? Bullish. Interesting. Indices are down. Bitcoin's up. Joy, is that imbalance indicator? This is a gap in propulsion gap. Wide range bar. Basically, wide range bar is a candlestick that is larger than the preceding two. It creates a wide range bar. You can get that in the Telegram group. If you go into the Telegram group, you can get that one. It's called WRB. WRB Hidden Gap. It's called. Google it. You'll find it. It's from Forex Factory. You can get it from Forex Factory. WRB Hidden Gap is called because the guy that came up with the concept of the wide range bar, a guy called Mr. Perry, M.A. Perry, really good trader. He came up with the concept of it. A lot of people have adopted the concept and called it all sorts of different things. I call it a propulsion gap because I've always known these as propulsion candles. Whatever you want to call them, they are basically order dumps after accumulation. My platform's just frozen. There we go. Back to life. Just missed a minute. Just missed a minute of my life there. Yeah, so if you go in the Telegram group, which is linked on the website, I'll send you a link to the Telegram group. It's easier, isn't it? Then go and look in the files section. You'll find it in there. We're stalling out a little bit down here at these lows. This is the New York open. And we're kind of stalling a little bit. There's a lot of selling pressure though, so hopeful, but also hovering over the button just in case down here, because not getting quite the pullback I was expecting, but we're also not getting the follow through at the minute. So we've got 37 seconds left on the candle. Let's see where we close this. We're hitting all this buy area here, so I've got 1% on the table. I think I'm going to take it. I'm struggling. I just don't want to get a pop back in the other direction. Let's see if we get a pop to the downside. If we don't get a pop to the downside, I'm going to get out. There we go. Pop. Okay, I'm going to start to scale out in a minute. Chewing up the orders down here, look. A lot of accumulation, a lot of absorption going on. Closing one. There we go. Sellers one. That was a lot. What you're seeing there was here. This wick was. We saw it. It was ticking up and down, up and down, up and down. There's basically all the sellers' orders getting absorbed by the buyers, and eventually the buyers just ran out and the sellers popped through. When you see that wiki action up, down, up, down, up, down, it's quite often before you get the sellers run out and we get a pop back the other way, which is why I took one off, because you get a big pop back. You lost all your profit basically. So stuck that in the bank. Still got 1.6% on. Getting a bit tired down here though. Cool. We're going to get another Nasdaq dump. Looks like it's dumping at the moment. Last question on the ADR. What's the best ADR to focus on? Bear with me a second. I'll have a look at the ADR in a sec. I'm just going to... Yeah, the buyers are coming through now. I'm just going to close this out down here. Got 1 point something percent, 1.6 or something. Just kind of want to stay on 10% today. Just selfish reasons. Nice little trade that. So propulsion move. Didn't actually get to play the pullback. Just went straight out the gate. So it's nice. So with the ADR, come on. I have too many dashboards. President Biden is on live. Really? Thanks for that. Good time to get out of the market. If President Biden's on, we could well see some stupid movement. What's he talking about then? That wasn't in the news. Is this some impromptu speech? We've got Ivy PMI. That was at 3 o'clock. Yeah. So with the ADR dash, have you got the? I don't know if you've got the dashboard or the indicator, but obviously the indicator draws the levels on the chart. So ADR indicator draws ADR 100 to 225. We don't often go beyond 225. We did yesterday. You get the odd day where you go beyond 225. 225's not often. As you can see, 2% of the time. These percentages here are obviously the averaged percentages that all FX pairs move beyond these levels. It doesn't mean that they're not going to. It means that on average, 58% of the time we trade within that range. When we break that range, we only do it 42% of the time. And if we do, we only get to 125 before we stop. 23% of the time we go beyond 125, 12% of the time we go beyond 150, etc., etc. There's no best level. All this indicator is telling you is that we have moved what we normally move. Yeah, it doesn't mean that we are going to come back the other way. It means that we've got to where we do most of the time. Often at those levels, you will find you get a bounce. So if we look at some of the ADRs today, like the Aussie US, this is obviously very extended because we had non-farm payroll. So it's pushed it down to 125. You had a bit of a bounce off of there, but it doesn't mean it's going to stop. We're expecting the US dollar to power up. So the way that I use the ADR dash and the ADR indicator is I look for ADR hits in line with my long-term view. So your long-term view can be made up of many different ways, right? You could use on the daily, you could use the 24 or 72 institutional moving averages. So on the 4 hours. So basically we are bearish, yeah, overall on Aussie US. So when you get an ADR hit to the upside, hitting the upside ADRs, great opportunity for entering short. If it hits 100%, what I do is I drop down to M5 and I wait for a market reversal alert to take it long. Yeah. So when we get extended down to 100, I start monitoring it on M5 and wait for a reversal alert. That means that we've had some market structure potentially shifting back the opposite way. Or a retest of the reversal alert. And then you trade it back. Yep. Depending on how you're trading, if you're position trading like I do, where you're getting into positions and you're holding them and adding to them as the market expands away from you, you get in ADR, and if that ADR fails, you get in the next day. And then when the market does its pullbacks, you get out. Or if you want to scalp it, so let's say, for example, we had this was an ADR push. I don't know if it was or not, but let's say it was an ADR push to there. You had that big pullback, you could have got out. Depends what time frame you're trading. If you were trading M15, you got a reversal alert maybe down there, you didn't get a chance to get out, it would have pushed up the next day. If you got an ADR hit the next day, you'd have taken that and you'd have exited both of those positions there. Bit like what I just showed you on the VPS. That's my EA running these strategies for position trading. So there's no right or wrong level. Basically, the more extended it gets, the less likely it is to push further. So these are like odds. The chances of it going beyond 150 ADR are 12%. That doesn't mean it's not going to happen. 1 in 10 times it's going to do it. It doesn't mean it's going to come back down. It doesn't mean it's going to put in an A-shaped reversal or a V-shaped recovery. What it means is it doesn't often get beyond that point, and you tend to find you either get an accumulation, drop, or you get an A-shaped recovery, or you get a pullback and continuation. Either way, you tend to at some point find price reversing in some shape or form. So really the key to it is the longer you leave it, the more chance you have of getting that big move starting. And again, you can use RSI. So if you have, let's just pick one like the Euro New Zealand. So Euro New Zealand is massively extended on RSI. Yeah. So the RSI dashboard is telling me Euro New Zealand is shot. Yeah. All the euros are shot. We know they are. On the hourly, it's telling me these are all shot. On M5 and M15, we're up to 150 ADR. Yeah. But we haven't had a reversal alert yet. We would have had one there. Yeah. You haven't had one yet, so you got one here about to form, potentially. So this is forming an M pattern. So when you get that reversal alert, that is a confirmation of an M pattern reversal. Yeah, there's when you're getting short. But the reason for getting in short on this isn't just because you got an ADR hit and just because you got a reversal alert on the reversal alert indicator. It's because on the 4 hour, RSI is massively extended, and we haven't had a profit take move yet on this. So the market is poised to take profit on this move. Everybody that's hit the buy button from here, is still in those positions. To get out of those positions, they have to hit the sell button to make their profit. When they hit the sell button, everyone will see the sellers coming in, and everyone will start to hit the sell button and get out of their positions. When everybody starts to get out of their positions en masse, the sellers will step in and go, this is a good shorting opportunity, and it will go like that. Yeah. ADR tells you when there's too many buyers in the market. RSI tells you when there's too many buyers in the market. They work together in tandem. And as a whole, it's a great system for mean reversion. Now, it doesn't mean that this thing can't go up there. It can. Of course it can. And it does. 12% of the time it goes beyond this level. But what it means is likely to happen is we're going to pull back. And we're going to pull back into an area of potential buying, or an area of support, or an area of supply and demand. Don't know which. Nobody knows which. What we do know, though, is all these buyers have got to get out of their positions at some point. And the ADR indicator, the RSI dashboard, etc., are all telling me that at some point soon there's going to be a selling frenzy. Sister 19 lol online. Look at that spammer. That spammer was in here yesterday in the chat. I was trying to pronounce their name, and I asked what that was about, and I've just realised it's just somebody's comment spamming. It's obviously some Russian sister. I don't know. But yeah, so things like EuroCAD. I don't know what other ADRs we've had today. New Zealand's, we've had some New Zealand hits. Oops. Yeah, so New Zealand yen's just hit ADR again. It's not really doing anything at the moment. Yen is strong. Wouldn't want to be trading long against the yen at the minute. So yeah, but there's lots of different ways to use it. I'm going to call it a day there because there's no point in over trading. I've got 10% in the bank. I'm just going to take it. I've got my Nasdaq long-term position running short, which is still looking nicely bearish. So I'm hoping to get a pullback. What I'd like to see today is a pullback to get that position on, and then come back down. But we've got a big sell area, buy area here to defend. So we'll see what happens. But I don't think we're going to get much movement till Monday. We might get a sell-off later. There's no news today on stocks, so no earnings. So we'll see. But so yeah, that's really all I've got for you today. 30% up this month on the account, which is nice. I'll be back Monday, and we'll see how everything's played out late this afternoon. We do quite often get some movement in the afternoons. We got this massive movement yesterday, and we got this massive movement on Thursday. But this is all earnings related. Earnings season is over. Well, not over, but it's petering out now. So the earnings fortnight, as it's known, was these weeks, where it's the biggies, it's the Amazons, the Teslas, the Googles, the Alibabas, all the big guys, yeah? So we just had all the earnings. So all the earnings volatility is out the way. We've still obviously got earnings coming. Poor old Peloton. Be interesting to see what happens to Peloton stock. Their earnings report is not going to be good. So look for a Nasdaq drop on Wednesday. Actually, don't look for a Nasdaq drop on Wednesday, because Peloton's about to drop out the Nasdaq because it's in number 100 and it's had the worst quarter of its life by the looks of things. So yeah, but it's all starting to feel like fizzle out now. So we're just getting down to kind of normal earnings. So I think what we will start to see now is probably some more organized market structure coming in on these indices, and hopefully some more structured moves on the US dollar as well. So some decent movement. We're expecting that push off the US dollar again. We're expecting that kind of movement, but probably in a market structure formation. So looking for longs. We've just done the pullback to the 72. So off we should jolly well go from here. As long as Biden doesn't say anything stupid, which, can happen. Politicians. Anyway, we're not getting into politics. So that's it for today and for this week. Been a good week. Still got some positions on, obviously. Waiting for these euros to drop. So next week, I think we'll see the euro correction starting. We're just approaching euro odd. We're just approaching that resistance. Remember I said earlier this morning, 150 ADR is what I was looking for a short on it. Just approaching that now. So we've taken out liquidity there. If this is a liquidity run, that liquidity's gone. If they can get above there, if they get 175 today, they've taken all the liquidity on the long-term investors that have gone short on this. So yeah, but this is the euro. Yeah, every pump has a dump. Every pump has a dump. We're gonna dump. Just waiting. All right. So yeah, have a good weekend, everybody. I'll be back on Monday at 8:30 as usual. We'll have a look at the market overview for the week, see where we are. We'll basically see if we can get some of these euro positions played out next week that are well overdue. And as I say, I'm going to spend a few hours this weekend having a look over the euro, over the financial news, just to see if I've missed anything, because the euro is not. There's nothing positive said. I was just reading something actually about the euro. Sorry. ECB's Ren says it would be logical for ECB to hike its key interest rate at latest by next year. Right, okay. That's just come out of the woodwork at 3:20 this afternoon, half an hour ago. Did not rule out possibly of raising the key interest rate as early as this year. Right, okay. This is obviously all still speculative and woolly as you like. At some point in the next 6 to 9 months, there's a possibility of an interest rate rise for the euro from the ECB. So this is a utter knee-jerk reaction. It's not this. I mean, this has just come out. So either this is a leak, knee-jerk reaction, or I don't know what this is, but this is not positive for the euro. So it's coming down. I've been more inclined to see an A-shaped recovery on this on Monday, Tuesday next week. At least a 50% pullback on it. A good ADR drop next week on the euro, I think is what we've got coming. So there's a lot of 200 moving averages as well that we are tapping now. We don't get to the 200 on the euro. The euro hasn't got that much strength. When we get there, we don't last. We never last. So I think this is a lovely squeeze, which is really, really primed to make some money out of. So don't worry if you're in euros short. What time Monday live? So the live rooms are every day at the same time, 8:30 and 2 o'clock. Today I was early because of non-farm payroll, but the live rooms are every day, 8:30 UK and 2 p.m. UK. Yeah, so morning is basically an overview. No trading in the morning, just overview of the markets and looking for opportunities. And afternoons is the same sort of thing, but then a little bit of futures and a little bit of scalping. A little bit of this, a little bit of that. All right, have a good weekend, everybody. I will see you on Monday at 8:30. If you need anything, come into the Telegram group. If you like the stream, give us a thumbs up. And I will see you Monday 8:30. Have a good weekend.